There's several examples of winning here at our company. A single mom that left her job 4 years ago that has made a 6-figure income every single year and switched careers. A broker from a different firm. She left a different firm because they were just multi-level and they were recruiting everybody instead of selling a product. And she was on a limited contract percentage. She came out with us and she got one of the higher contracts that we have and immediately replaced her income and is now making over a 6-figure. I'm thinking of another individual that just introduced a pretty wealthy person to us. We did a financial plan for that person, made 50% of the commission on that particular case. That paid her more than $100,000 on one case and didn't even show up to. We're going to share how to earn money in a pandemic and not have to leave the comfort and safety of your own home. In February 2020, the United States was really starting to feel the effects of COVID-19. Not a month later, in March of 2020, our country was pretty much shut down and quarantined. This is still an ongoing challenge even today. Imagine the American economy at a record 3.5% unemployment rate in January. In March, go to an almost 20% unemployment rate. That's more than 30 million jobs lost. Retail stores, gyms, bars, restaurants, all forced to shut down. Not by choice, but by orders. Household name companies like Hertz, Pier 1 Imports, JCPenney, Gold's Gym, 24-Hour Fitness, and many more, all filing for bankruptcy protection. As I make this video, I believe this is still just the tip of the iceberg. Economists are saying that 40 to 50% of businesses as a whole will go out of business by the end of this year. Here at the Financial Architects, it's one of our core beliefs to be proactive, not reactive. As a part-time supplemental income option or a full-time, full transition from one career to the next, we welcome you to take a look at the opportunity. Now, before I get started, I don't want to be just a negative publicist. What goes up obviously must come down, but the vice versa also applies, ladies and gentlemen. I've been taught a setback is set up for a comeback. Today, the United States is still the leading economy in the world. Here's a fact. 1/3 of the American population, called the baby boomers, more than 81 million Americans, are all going to retire within the next 12 years. That's a massive wealth transfer to the tune of a little over $60 trillion. This is otherwise known as the silver tsunami. As baby boomers go and retire, of course, they're concerned with a couple different things. The absolute number one thing that they're most concerned about is generational wealth transfer. So where do they grab all their money and how do they pass it on as tax efficient as possible? But here's another question. How will they collect an income stream for the rest of their life on a guaranteed basis? Those two questions are at the tip of their skull and they need help in that certain sector. These are just two of the questions that the financial architects are great in answering for the wealth transfer in the population. Do I sympathize for the loved ones that were lost during these COVID times? Absolutely. The opportunity to make crisis into Christmas or make chaos into collaboration can save more lives than you know. Or to offer security in an insecure world currently can help more lives than you know. In this overview that I'm about to present, I'd like you to ask yourself 3 specific questions. Question number 1, is this a credible company? Question number 2, do the products and services make sense? And do you know of anybody that they can assist? And then, of course, question number 3, is the opportunity COVID proof? And can you make money doing this? Whether it be from the comfort of your own home or at one of our local offices, we welcome you to check out the body of this presentation. And you be the judge of this being something that you can get passionate about and help people. So the Financial Architects is a financial planning company. We're pretty much known as a discount brokerage company with big companies that we're affiliated with, such as Prudential, AIG, National Life Group. You have other companies like Gerber Life, massive companies like Athene and Pacific Life, big financial planning firms that have become some of our favorite product providers. What we do is not necessarily unique, it's just how we actually do it. Let's take, for example, a Foot Locker. If I walk into a mall and I'm shopping for shoes, I have a bunch of different choices. Choices such as Nike, Timberland, Reebok, every shoe in the store. So now it gives me an opportunity to have choice. We're kind of like the Foot Locker of financial services, where we have all of the best companies and all of the greatest products with the least amount of cost possible. So if you're looking for more value or you're looking for a decrease in cost, we can definitely compete for that business on a larger scale. So it's very similar to when you walk into a restaurant and the waitress gives you a menu. The menu that you have with a bunch of different choices, you're pretty much given the choices, the menu, so to say, in financial services with a bunch of different items. Items such as IRA platforms, which stands for Individual Retirement Agreement, by the way, but we'll call it Individual Retirement Account if you'd like. Traditional IRAs, SEP IRAs, Keogh plans, tax sheltered annuities, which are otherwise known as TSAs, big company plans like 401k platforms or 403b platforms, or even 457 platforms that we can help a potential client with. Whether you're looking to roll over your old 401k into an IRA, we can help you with that, whether it be conservative, whether it be moderate, or whether it be aggressive in the style of investment options. We can help you to diversify it the right way in the right plan. Several companies that we do business with have been around since the 19th century. So they've seen pandemics such as the Spanish flu. So the pandemic that we're going through currently, they have experience with other pandemics that have happened over 100 years ago. So when you look into insurance companies, whether they help you with term insurance policies or permanent insurance policies, we have every company under the sun that can help you in that type of category. Or if you're looking for a disability plan to insure your hands or ensure that you continue to make an income on a monthly basis, we have those companies. Or if you're looking for some type of illness protection, God forbid, if you have a heart attack, stroke, cancer, unfortunately, you go blind, you have an amputation, you get ALS. I mean, all of these things that you worry about, but you just don't want to worry about, we can help you with that scenario. So I'll give you a couple different client examples. Client number one, we're going to call them Bob and Mary. Bob is 45, Mary is 40. They both own a home. The value of the home is about $500,000. The payoff on the house is $400,000. They have two children. We'll call them child one and child two. Okay? Now, child one and child two are 3 and 5 years old. They're going to go to college at some point in time in the future. But Bob is a blue-collar worker. Mary is a stay-at-home mom. They both know that they need at least a term insurance policy. So here's how they develop their insurance need. They develop their insurance need by something called DIME. DIME is an acronym, D-I-M-E, that stands for D, debt, and of course, unfortunately, death. I, income, M, mortgage, and E, education. Now, because Bob is earning an income of $120,000 a year, normally the insurable need is right around 10 times his annual income. But if I wanted to be more dialed in and explain to Bob, hey, this is why you need so much insurance, then I'm going to describe it with that acronym. Now, Bob has zero to little debt. So to bury him, it's going to cost him about $30,000. He does a celebration of life. Mary needs to grieve over her husband. That's exactly why that first D is there. I stands for income. Normally that's 6 to 8 times his annual income. We're going to say that Bob's annual income is $120,000. So 6 times $120,000 is $720,000. So you add that to that category. Next, you take mortgage. To pay off his mortgage, it's $400,000. So you add that to his mortgage. And then his 2 children want to go to some sort of college that may be a Cal State, maybe a UC school because they're here in California. So that's going to be $70,000. Hypothetically speaking, it's going to cost them $35,000 a piece. And let's just say education goes down a bit, right? So you add $30,000 plus $720,000 plus $400,000 and then add $70,000. And you have an insurable need of $1.2 million. As you can see in the highlighted area, $227.18 is going to be Bob's projected term insurance premium. Now, he can come back healthier and be rated $189.50, or he can come back and be rated lower, $314.24. But either way, we can move the policy however he'd like it to be moved. In Mary's illustration, Mary is 5 years younger than Bob. So in this illustration, let's say she's also second best, as you can see with the highlighted area, for $600,000 for a 40-year-old female at second best is $59.87. She can be rated better, which would be $51.31, or she could be rated less, which is $83.65. So altogether, both clients for their insurable need are paying roughly $287 a month. That's on 2 term insurance policies that are very similar to car insurance, meaning if you don't get into any accidents, then of course you lose all the money. If you do, then you're using the insurable need from that policy. God forbid they pass away, their heirs get $1.2 million from Bob's life insurance and $600,000 from Mary's life insurance. What if they don't pass away? What if they have a heart attack or a stroke, or unfortunately they have some sort of cancer that they've come down with? Did you know in a term insurance policy you can pull out the death benefit and not have to die to use it? How do you think that would make them feel, knowing that you helped them with that insurance service and knowing that they don't have to skip a beat? They can still pay the mortgage, they could still pay the car payment, they could still send little Johnny to college if they needed to. Having that insurance plan available and ready for them is very, very important. In life insurance, it's a little bit different, meaning this: all of the money that you're putting into the policy, of course, if you don't utilize it, you lose it in a term policy. There's a secondary type of term insurance called return of premium term insurance. Now, today, 2020, return of premium term insurance does not have living benefits unless it's in something called a guaranteed UL chassis. If you want to learn more, you can, of course, get in contact with the person that shot you this video. In return of premium term, normally the cost is twice as much as a non-return of premium term insurance policy. Now, as you can see inside of this graph, if you're paying into a return of premium term insurance policy and you're paying $600 a month in life insurance, you get back all of the premium at the end of 30 years, income tax free. That's right. So imagine all of the insurance premium that you pay right now for your life insurance. Imagine if you had the opportunity to get all the money back, income tax free. So that's scenario number 1. Obviously, everybody that's listening to this video should get their insurance options, knowing that they have term insurance without ROP and then term insurance with return of premium. Second client scenario. In client scenario number 2, they decide to go out and get a permanent life insurance policy. This is also known as tax-free retirement strategies, also known as Be Your Own Bank or Infinite Banking. There's several books written about these different scenarios and strategies, but there's no such thing as a bad insurance company. There's only bad agents, in my opinion. Now, in this illustration, Bob, the client, is of course going to pay 4 times more for a $1.2 million life insurance policy. So he's paying $800 a month into this permanent life insurance policy. This is a plan called indexed universal life insurance. Now, there's 4 different types of permanent insurance. There's whole life, there's universal life, there's indexed universal life, and then there's variable universal life. Whole life is the Rolls-Royce of life insurance. It's normally the most pricey. Universal life is normally the most inexpensive permanent insurance chassis out there. Indexed life is normally right in the middle. And then, of course, variable life insurance is also expensive because it's intertwined in a bunch of sub-accounts that are essentially tied to the true stock market. So depending on which option that you'd want is going to be dependent on what the agent offers. Now, I will tell you this, with variable life insurance, you need a securities license to offer that product. So let's look at this indexed universal life insurance policy, which is pretty much the best of both worlds of fixed and variable returns. So in this illustration, like I was getting to, Bob, the client, who is 45 years old, is putting in $800 a month, which is $9,600 annually. Now, after 30 years, there's 2 different options that the client has today, 2020. They have a 3% fixed option, and then they have an indexed option, which is going to be, for argument purposes, yielding a 6% illustrated rate. Now, you will find with other insurance carriers and companies, they do have more returns as well as less returns. The one thing that you can be certain of, though, is cost. If you are looking into one of these permanent insurance policies, the number one question to ask your potential advisor is, what is the insurance cost internally? Be careful of that. So if you have a cash value of $490,000 30 years from now, in your term insurance policy, the $227 that Bob was paying into his term multiplied by 30 years is all gone. In this permanent insurance policy, yes, he paid more, but he has $490,000 of permanent cash value there waiting for him to use if he wanted to. On that note, he still has his $1.2 million life insurance policy. Mind you, at the end of 30 years, he could lower his death benefit. He could say, hey, I want to keep the $1.2 million of life insurance. He can even lower the death benefit in year 3 or year 7 or year 16. It's very flexible. Now, I will tell you this. Term insurance is very vanilla, very easy to understand. Permanent insurance is not. It's a moving target. The rules change year by year, so it's good to be well read when you're offering these different products and services to the consumer across the kitchen table. But across the board, the biggest question is, Bob, Mary, would you like a term insurance policy, which is like renting, or would you like a permanent insurance policy, which is like buying? That's really it. And then you give them the different options. In client scenario number 2, the target, which is what pays the agent, is $5,043. Here's what target is. Target is what pays the agent. It's not the imaginary amount of money that the client should be putting in the policy, or it's not, hey, this is a no lapse guarantee. Target is nothing more than a confusing name for people to use that pays the agent. So in client scenario number 2, Bob ended up getting a permanent insurance policy, otherwise known as a tax-free retirement strategy, and he pays $800 a month. And Mary decided to do a term insurance policy that's just going to cover her for 30 years, and she pays about $59.87 a month. So that's the particular amount of money that they're putting into their retirement plan, their insurance supplement, whatever you want to call it, their little Johnny goes to college fund, things of that nature that they can put into that long-term savings plan. Client scenario number 3. Bob and Mary, they both exited their jobs a couple months ago. Bob had a 401k at his previous job. We'll just say Bob had $100,000 in an IRA or 401k. Bob wants to get into some other IRA. Bob wants to roll his money over into his own individually owned IRA. So as a result, he rolls $100,000 into something called an indexed annuity. In an indexed annuity, he has no risk of loss. So he has guaranteed principal returns inside of his $100,000. Day one, he has no risk to lose any of his money inside of the stock market. Also with that $100,000 rollover, he has indexing returns, which are going to mirror the S&P 500 index. Okay. With that, he also has something called an annual reset. So every single year in the market, he gets an annual reset of his money factors inside of it. No risk of loss, and he can take a lifetime income stream for the rest of his life if he'd like to. In scenario number 3, all he would have to do is roll his money over from one 401k platform to an IRA with us. Now, as I went through 3 client scenarios, mind you, I left out a bunch of different options inside of the scenarios. There's people, tax advisors, that give me referrals all the time. Manny, this client needs a SEP IRA. Manny, this guy's a truck driver. He needs some type of life insurance. Manny, I got this entrepreneur that needs some help in key man insurance. Manny, I have a business owner that has 2 partners that want to do something called a buy-sell agreement. I'm just giving you the 3 client scenarios that are very simple to understand and apply towards some compensation examples that I'm about to give right now. Now, as I get into the 3rd section, which is compensation, it's very important to understand that this industry is one of the highest paying industries in the United States today. You don't need a college degree. You don't need an alphabet soup behind your name. You don't need to have any of these designations to become an insurance agent or an insurance broker, a retirement specialist, or a retirement strategist. Another thing that I did forget to mention is that a lot of mortgage representatives, a lot of realtors, they love to get an insurance license and retirement planning license with us and offer it as a supplement to what they're currently doing today. So as I jump into the compensation part of this video, I want you to know something. Some people do it part-time. Some people do it full-time. Some people have a flex career. Some people are working from home, smiling and dialing, sending text messages, shooting direct messages to people, whether it be on Facebook or Instagram. There's other people that are at home doing little memes, things of that nature, and really building a family life within their career goals. See, if you're anything like me, I started off part-time and I didn't know about financial services. I got educated a little bit more about financial services and I thought, man, this is an unbelievable career. I had looked into baby boomers. I had looked into the wealth transfer. I also didn't know what I was even doing with my own personal financial strategies. So at the age of 29, I thought to myself, man, if I just learn what a mutual fund is, I think I'm going to get my money's worth as a result of being part of a financial planning company. I never knew that I would make the amounts of money that I have made in my career today and also affect the amount of people that I affect on a long-term scale. So it is legitimate that you can have a true career and actually have a life with your kids outside of that true career. Even today, during these COVID times, people want to earn money from the comfort of their own home, study up on some of the products and services that may make sense, whether it be in California, where they have close to 12% of the American population, or abroad domestically here in the United States. So wherever you'd like to conduct business, you're more than welcome to do so, and we have no territorial boundaries currently. Now, mind you, this is a licensed quality profession with a great training program. We have training modules where you can actually learn from the comfort of your own home. We have training online where you can get it through Zoom. We have updates that are very consistent on our Facebook. So the level of support that you're going to get here at the Financial Architects is bar none one of the best in the industry. Let's get into compensation. So I gave you 3 different examples of Bob and Mary Smith. In example number 1, let's say you started off as a 70% full-time person with our company. Now, for the purposes of illustration, as you can see here, if Bob and Mary just got 2 term insurance policy, Bob pays $227 a month, Mary pays $59 a month. That's a total of about $287 every month that they're putting into their insurance plan. Multiply that by 12. Let's just round it to $3,500 every single year. If you're the agent on this case and you're on a 70% contract, that would mean that $3,500 multiplied by 70% is $2,450 commission on this client. That would mean that $2,450 is what you're paid on this client for helping them. Client scenario number 2, Bob decided to go with a life insurance retirement plan. His target on that annually is $5,043. Mary just did a term insurance policy. The annual premium on that was $718. So what you do is you take the $5,043, add it to $718. That's going to be an annual commission of $5,761. If you're the agent on that case and you're paid on a 70% contract, you would get paid $4,032 on that one case. Now, in client scenario number 3, Bob decided to roll his $100,000 401k over. He rolls it into an annuity. The annuity pays you 5% to the field. Multiplied by 70% contract, you would be paid $3,500 for helping that client out. So let's just say all 3 apply, meaning Bob and Mary, they do option number 2 where they get a permanent life insurance policy, Mary gets a term insurance policy, and Bob rolls over his 401k. On a 70% contract, this is how you would get paid. Now, as you can see, Bob does $5,043 again, is what you're paid in target. Mary does $718. That's $5,761. Bob rolls over his 401k. That's $5,000 to the field. That's a total of $10,761 target. Multiplied by a 70% contract, that's $7,532 you would make on that one client. Now, what if you were on a 100% contract? At the Financial Architects, we have contracts all the way up to 120%. So on a 100% contract, that same scenario, as you can see, $10,761 is the target commission. So you would be paid $10,761 on that transaction. What if you had one client a week that you could help like that and make $10,761 multiplied by 4 clients a month is $43,044 in a month. There's several examples of winning here at our company. I have an example of a mom that stays home with her kids. Husband works a regular job. She made a couple $1,000s last month just in a couple term insurance policies. I have another example of a realtor who's doing very well for herself that makes an extra income here with our company, offering mortgage protection life insurance for her clients. I have another example of a single mom that left her job 4 years ago that has made a 6-figure income every single year and switched careers. She was tired of driving an hour in traffic one way to Irvine and an hour back in traffic, and she decided, hey, what have I got to lose? I could learn a bunch about financial planning, and at the same time, I don't have to quit my job. I have another example of success with a broker from a different firm. She left a different firm because they were just multi-level and they were recruiting everybody instead of selling a product, and she was on a limited contract percentage. She came out with us and she got one of the higher contracts that we have and immediately replaced her income and is now making over a 6-figure income. There's several different examples of success inside of our company. There's another individual that I'm thinking of, on one deal, she made over $100,000 on one deal. So several different examples of success within our company. I'm thinking of another individual that just introduced a pretty wealthy person to us. We did a financial plan for that person, and on a split case, she didn't even show up, made 50% of the commission on that particular case. That paid her more than $100,000 on one case and didn't even show up to the appointment. So we have split cases, we have individual cases, we have referral partners that we just write up the business and we split the residuals inside of the plan. Any option that you can think of, we've got here at the Financial Architects. Now, ladies and gentlemen, as easy as I'm making it look, of course, it's not that easy. Of course, you're going to have to get after it. Of course, you're going to have to build a database. Of course, you're going to have to learn the products and the services and what happens if they pass away. What happens if they lose their job? What happens if little Johnny doesn't go to college? Of course, you're going to need to learn a lot of different moving things inside of the body of financial planning. But if you had the opportunity to make $43,000 in 1 month, would you take that opportunity and run with it? Would you ask a little bit more questions? And I'll ask you this to close. Do you have that current opportunity in what you currently do? I asked a buddy of mine a couple years back, I said, how's everything going, man? He goes, oh man, everything's good. Everything's cool, man. You know, another day, another dollar, you know, just a brother trying to make some money. I go, okay, awesome. I said, how different was your life 3 years ago than it is today? And he goes, man, that's cold-blooded. Because I knew this is an ambitious dude. I knew that this is a person that wanted more for him and his family. I knew that he was just sick and tired of being sick and tired. If you're sick and tired of reading restaurant menu from right to left, focusing on the amount that your dinner is going to cost versus what you really want to eat, I'm talking to you. If you go to your job tomorrow and you pump your chest out and you talk to your boss and you go, hey, what do I got to do around here to make $100,000 a year? Or even better, go, hey, what do I got to do around here to make $250,000, a multiple 7-figure income? If you go to your boss right now and you ask him that, what do I got to do around here to make X? And they turn around and look at you like you're crazy and tell you, I don't even make $250,000, or I don't even make $100,000, or I don't even make a 7-figure income. It's a hint that you're in the wrong place if that's your goal. Here at the Financial Architects, we don't hire everybody. There is an interviewing process. You do have to have a license to actually get involved with our firm. But a good opportunity only becomes great when you act on it. So I discussed a bunch of different things, didn't I? I discussed the company, how credible we are, how we're affiliated with a bunch of different really big companies. Number 2, I talked about some of the concepts that may or may not make sense to you currently, but you know that there's a big need for some of the stuff that I talked about. And then lastly, I talked about the compensation. If you're a little bit curious to what we got going on, we'd love an opportunity to compete for at least your financial planning business. If you're looking into a business opportunity, again, we would love to interview you for a position with our firm. Please get with the person that sent you this video, or you can contact us at 888-350-5396. Otherwise, you can email us at info@tfainsuranceadvisors.com. We'd love an opportunity to sit down with you and share some other options that we might have. Thank you so much for paying attention. And until next time, stay safe.